Imagine waking up to a tax bill for over 700,000 rands and it's for money that was never income in the first place. You'd be shocked, right? Maybe angry, maybe panicked. That's exactly what happened to one of my clients. Let's call him Dr. John. SARS flagged deposits in his business bank account as income and slapped him with the tax bill of over 710,000 rands plus penalties and interest on top of that. But here's the good news. We fought back. And I'm going to show you exactly how we got that tax debt reversed entirely. And along the way, I'll show you how you can protect yourself from falling into the same trap. Because here's the thing, many business owners, professionals, and even side hustlers are making the same simple mistake that got my client into trouble, and they don't even know it until SARS arrives. Stick with me. This video might just save you hundreds of thousands of rands in tax debts. I'm Sia, I'm a qualified accountant, and I help businesses to pay less tax, stay tax compliant, and avoid unnecessary tax penalties. Let's dive in. So here's what really happened. Dr. John is a professional doctor who runs his medical practice in KZN. During this particular tax year, he had 1.6 million rands worth of deposits reflecting in his business bank account. SARS, seeing these deposits, assumed they were income. On that basis, they issued a tax assessment charging him over 710,000 rands in taxes, plus penalties and interest on top of that. Now here's the problem. These deposits were not income. A big portion of that money was actually owner's contribution. For example, personal funds that he, as the owner of the business, was putting into his business from his private investment account. And those personal funds had already been taxed when he withdrew them from his pension fund. So SARS was trying to tax his money for the second time. Unfortunately, this is very common. Many business owners don't realize that how you move money between accounts really matters when it comes to SARS, because SARS really watches those bank statements very closely. So let's go back to how it all started. Why did SARS think my clients owed this much money in the first place? Simple. It was bank deposits. When SARS reviewed Dr. John's bank statements, they saw large amounts, over 1.6 million rands, flowing into the business bank account. Now here's what most people don't realize. SARS doesn't care about your intentions. They only look at the transactions. If money lands in a business account, they assume it's business income, unless you can prove otherwise. In this case, the majority of these funds were actually owner's contributions, personal money that Dr. John had transferred from his private investment account, money that had already been taxed. But because the funds came through the business account, SARS treated them as new taxable income. That triggered the tax bill of over 700,000. And it gets worse, because if you don't respond to SARS fast enough, they don't wait for your explanation. They just proceed to charge you the tax that they think you owe them. Now, this is a really important point. Always respond to SARS letters. In this case, initial SARS requests were either missed or not responded to in time. So what did SARS do? They proceeded to charge him tax based on their assumptions, not facts. And their assumption was simple. Every rand that landed into the business account was the same as taxable income. And the result? A tax bill of 710,000 plus penalties plus interest, pushing the total amount to 1 million rand in taxes. This is when the client came to us, panicking, worried, unsure what to do next. But here's the thing, with the right approach, even a huge SARS tax debt can be fought, if you have the records to back your case. Our first job was to dig deep and gather all the supporting documents. We needed to prove two things very clearly. Number one, that the funds were not his income. Number two, that these deposits were owner's contributions, money that Dr. John was injecting into the business. Here's what we found. Dr. John had transferred funds from his personal investment account. Number two, the source of these funds, a pension withdrawal from his previous employment had already been taxed. We traced these personal funds into the business account as capital contributions. To make the case clear for our client, we prepared a comprehensive dispute to SARS. This dispute is also known as a notice of objection. Here's what we included. Number one, a detailed explanation letter setting out all the facts. Number two, the client's financial statements clearly showing that this was not income, but rather contributions that the client was making to boost the business. Number three, tracing the flow from the personal investment account into the business account. Before you continue, I have a quick question for you. Are you finding this breakdown helpful? If you are, give this video a like so more South African business owners can avoid these costly mistakes too. And don't forget to subscribe. We've got more real case studies coming up. Now back to the video. So what happened after we submitted the full dispute to SARS? First, they acknowledged the receipt of the notice of objection and the supporting documents. Number two, their team then conducted a thorough review. SARS is actually very reasonable. If you give them clear, well-documented evidence, they will always consider your case. And in this case, the documentation spoke for itself. The source of the funds was personal, not business income. The pension withdrawal had already been taxed, so there was no need for it to be taxed the second time. Number three, the owner's contribution was properly recorded in the financial statements. After their review, SARS came back with the outcome we were hoping for. Their entire 710,000 tax charge was reversed. All penalties were also reversed, and the client's tax record was corrected. In other words, we won the case and our client walked away debt-free. Now, how can you make sure you don't end up in this situation? Let's get into the key lessons. First and most important, never mix personal and business funds in the same account. In this case, the problem started because personal money was transferred into the business account. That made it look like it was income. And what's the better approach? If you need to inject money into the business, record it clearly as owner's contribution and document where it came from. Even better, set up separate accounts for personal, business, and investments. This alone will save you a world of trouble with SARS. Second key lesson, always respond to SARS quickly. Even if you're not sure what to say, speak to your accountant, get advice, but just don't ignore them. In this case, our client initially ignored SARS, which led to SARS charging the incorrect tax. If the client had responded sooner, this issue might have been prevented earlier. Remember, SARS will always assume the worst if they don't hear from you. Lesson number three, keep proper records always for a minimum of 5 years. In this case, we were able to fight the tax debt because the client had good records. They had clear financial statements, they had bank statements showing the flow of funds from the investment account to the business account. They had supporting documents proving that the pension withdrawal had already been taxed initially when the client resigned from their previous employment. Without those records, this would have been nearly impossible to win. So, if you take nothing else from this video, here are 3 simple steps to protect yourself from the same kind of situation our client was in. Number 1, keep personal and business funds completely separate. Use proper accounts. Document owner's contributions clearly. Number 2, respond to every SARS letter. Even if you don't fully understand it, ask your accountant, but never ignore SARS. Number 3, keep clean, organized records. These could be bank statements, financials, and any supporting documents that explain the movement of money in your business. Doing just these 3 things will put you miles ahead of most business owners and will give you the tools to fight back if SARS gets it wrong. Now, if you're watching this and thinking, wow, I don't even know if my SARS accounts would survive a SARS audit, you're not alone. That's exactly why we offer a consultation to review your tax position. We'll take a quick look at your setup and highlight any danger zones before SARS does. If you want to book that appointment with us, link is in the description. And of course, if this video helped you, give it a like so more South African business owners can learn these lessons too. Every week, I share real stories like this one to help you pay less taxes, stay tax compliant, and to sleep better at night. See you on the next video.